All right. So yeah, this is our weekly forecast on GDPUSD, looking at what the market holds for the week ahead. And we are obviously having a very interesting times in the market, interesting times on GU at the moment, because we can see that GU has actually come to the lowest of its ever been in the market. So we see that this was the low that he's come to, was actually the pandemic low, and we have broken the low. Price has broken the pandemic low. So, and we might still be seeing a push to the downside. That obviously we are not sure of, but before the end of September, there's going to be a price rally to the upside, and that is going to happen, and that is guaranteed. So between September ending to October, we'll see price pushing up, obviously to the next level to break structures and structures and structures and structures, breaking all of the structures. So we might see price doing that. So the first structure that we anticipate that price is going to break will be this one. All right, and then we'll not see another one, and before we not see proper reversal in the market. So it's going to be gradual if that happens, but what I want you to know is that the market is at a oversold level, if there is anything like that. There's a forest terminology. So yeah, the market is actually at the lows of the lows right now. We see that price already broken the previous low by a weak rejection on this candle. And looking at that, this is the weekly time frame, and we're looking at this week. We had a push up and a push back down. So the market went up by opening here. Remember, the market closed at the bullish. It went up a bit for a few pips and then massively drop. Now that drop was facilitated by the news. CPI news was a CPI news that happened on Monday. So that news actually caused this massive, obviously is all manipulated. These are all algorithm that is being used by the central bank to, they just hide behind the news to do what they're doing. So again, we will all say it's the news, but the reality is the big guys just did their job from their office. They just, turn off the algorithm and use a manual application there. But that's another day's talk. Now, what we're looking at is a possible reversal. Now, why would I think of that? Well, the possible reversal may be opportunity for market to maybe create a bullish candle for the next week, and then try to play around that bullish candle. Now, if we move to now looking at the monthly time frame, again, we are setting that the low has been created, and also the market obviously is reducing momentum. So what we mean by that is this month we see this candle still printing. It's not that big as this candle, all right, but we still have what, 12 days to the end of the candle close. So in the next 12 days, something might be going on here. We might have a rejection out of this zone, I'm thinking. So the first thing that we need to know, where is price right now, to be able to know that in the next 12 days, are we going to see a drop or a push back up in the next 12 days? So this is my concern. Now, looking at the price at the moment, we just saw that price came to this low. So we will be able to identify that price, all right, might eventually come to this low. Now, this level where price is actually the major zone, okay? I'm looking at the major zone right now that price is or might come to. But we also have price right now breathing on top of 1400. So we might have another major zone at that 1400. So we see price is right there, rejecting away from the 1400. Okay, that's another major zone. So we see that happen. Now, in between these major zones, there are minor zones which I perceive the market will get to. But at the moment, I can see that the market is obviously rejecting off the major zone, okay, which is 1400. Let me adjust that. So you see 1.1400, the market is rejecting off there. Now we can see that, right? So the market is reject off the 1400. So what does that imply? In the next 12 days, we could possibly see a massive rejection to the upside. That can happen, that could happen, but we're not sure because we already find a rejection. Price came down to this low. Remember, price, just look at that. Price came down to this low and then rejected back up. And this rejection might continue, who knows? So the best thing for us to find out is to go to a lower time frame, like the weekly time frame, to look at the behavior. First, we saw a bullish candle print last week, and this week that just ended a bearish candle. So what are we looking at? We are seeing that price actually is again rejecting from this zone. It's a downtrend, all right. We should be looking at a downtrend, obviously. This is a sell trend, but we are at the point of oversold, whereby we might be seeing a consistent bullish run in the market. So we might be seeing buyers trying to introduce themselves. So even when you're trying to look for a sell, the market is giving you a buy, and you'll be wondering, what's going on? I thought we are selling. Why is the market buying? It's because we are at the edge of the market. We've been stretched. British pounds is being stretched, all right, to the lowest of the lows. So right now, when you are at the bottom of the market, you gotta be careful. You don't just try to just say, okay, I'm gonna ride the trend, let it go. You might be surprised what the market would do. So the best thing is to analyze the market ahead. So I can obviously see another strong level here, which is a major level that the market might eventually bounce to in the future. So I can see that that is a major level that the market will bounce to. Who knows? Maybe not. So the market might come to that major zone there and then and create price action. We also see another price action here. Where's that? On the 1800, price came there, rejected, and then pushed back up. But we'll do all of that later. But I just want you to know that the strong zone that we're looking at is here and the bottom right now. So let's look at the daily, what the candle behavior is. Now, if you look at the daily, there's a very interesting formation that may introduce us to a reversal. I'm looking at that as a strong information here. If you look at the daily time frame, all right, we have this rejection zone here, which is around a minor level of the major level, which is here. So I'm gonna just adjust that so that you can see. So that's a minor level. The price came up there, play around that zone for a while, and then and bounces off from that zone, and we see price drop. Okay. Now, price dropped and came to what? To the major level and rejected massively. And what it did was to move up again. When price rejected, it went above and move up. How many pips was that rejection? Push up? That was about 200 and something pips. Now that shows us that the market reacted at that zone and pushed up. So what I can see for me on a daily time frame is a W pattern. I'm seeing something like this for me right now. but it's not confirmed yet. But I could see a double bottom is introducing itself. Why? Because this candle already is a daily candle, all right, which shows a reversal candle at the key zone. All right, this is a reversal candle at the key zone forming. So we can see that the market has just created a reversal. Yeah. So the possibility of this reversal happening is very close. So what I'm saying to you is we are at the middle of the month, sorry. We just passed the middle of the month, which obviously we can see that the British pound is going to start rallying up. So what I want you to pay attention to is number one, have a trend line that is defined. That's very important. This is the daily trend line, defined. I know some people say, well, I don't do trend line on the higher time frame, but there are some situations where it calls for it. All right. Then understand that this is a bigger picture. Price came here and dropped, came back, touched it and dropped. So we can see that it was close to it here and also dropped because of the major, what do you call it? A minor zone there that price came up to, or even a major zone, if we were to look at the left. But at the end of the day, we see that price is already creating a reversal at the bottom. So that tells me something that I should be watchful. I should be careful how I plan to sell this week, because on a daily, I see a very massive W pattern forming with a reversal candle as well, candlestick. This is a chart pattern for me, and this is a candlestick pattern. Okay. Now, looking at the candlestick pattern formation, we can see that there was a massive engulfing bearish candle, but again, subsided by the bullish candle, and then again, a bearish. So what I'm trying to let you know is the buyers are already introducing themselves into the market. Even though the sellers are trying to force the same in, they know that the buyers are coming in. So pay attention to this chart pattern. That's number one. And also pay attention to this candlestick pattern. That's number two. Now, the daily is clear enough to give us some information about what the market might do in the coming weeks, in the next 12 days. So what we need to look at for now is how do we position ourselves? Looking at the 4-hour time frame, we can see that the bullish run is coming in. We see that the bullish candle is coming in. They're gradually coming in, and we could anticipate that the market will break this high first and then give us a sign that we're going in. So we might be seeing a reversal in the coming week. Markets may begin to push up. Okay, but the best way to do it is to first of all know the swing high on the 4-hour time frame, or even on the daily. Looking at the swing high, but we can't actually get a position of the swing high on the daily, otherwise we'll have a misinterpretation. Since we are day traders, we should be looking at the 4-hour or the 1 hour to get a particular swing high and low for us to position ourselves in. So I'll rather go with the 4-hour, which is a bit clearer for me for a swing high and low. So what I would do is I'll look at, let me take this off. I'm looking at two things here. There's a major zone here. All right, a minor zone. There's a major zone here. There's a minor zone here. So there's another minor zone here. So we can see that price came up here to this major zone. All right, close to 1600. So I'm gonna put that there. I'm just gonna put that major zone there, and then we change it to major zone. So that's 1600. Around about that, price came here, rejected, push back, play around the break above, retest and push up, and came back down and try to retest again within that zone, which it did retest within that zone. We see price come up there to tap into that zone. All right. And then what happened? Price came all the way down and reject again. So what we have is the swing high here. We have the swing high and into the swing low. Okay, that's what we have. So now we're looking at what possibly the market is going to do. So we might be seeing two things. Market will rally up to the zone again before dropping. So what I'm anticipating, this is a 4-hour time frame. We might be seeing market rally up to the zone massively and then drop. Now, on the short-term perspective, which is as a day trader or scalper, you're looking at a run-up of about 180 something pip for that day. So this might happen in a day or through the news or something. The market may rally up for 100 and something pips. So if you were to look at trading 50 pips by day or targeting 50 pips, you probably would have had massive 3-day trade, or probably just like a day trade. You'll be able to catch that. But the structure is not definite. So even though we're looking at the possibility of market coming back up to this zone because of the what we just did with the Fibonacci, looking at the swing high, swing low, we still anticipate that the market will go up. So that's what I'm telling you. It will still go up. It might break above that to test this high, and then retrace and then push back up. So possibly this might happen. Price push up and then break above this one, okay, and then retest and break this high and then start pushing up. That might happen. But what we want to pay attention to is the W pattern forming on the 1-hour time frame, and also coupled with this formation that we might see. So I want to see something like this as well. So price may come back, come back to retest this zone and then push up. So what I need to focus on is two things this week. Number one, possible reversal. Possible reversal. Number one, wait for that price to reverse. Okay, that's what we're looking at. Possible reversal may happen in the market. So we're looking at possible reversal playing out within this channel. So I'm looking at this channel. If I was to take away this one, that'll give me a picture of that. And then obviously that's a more, if you're looking at another perspective of this, you might have another one there, something like that. But the first thing you want to see, let me take this one off. The first thing you want to see is that the market break. The market obviously break this one. Okay, so that may happen within whatever time frame you're trading from, and again a drop. It might happen. It might happen. We might see a push up here, and then price may drop. Okay, and then form this. On what? On the 4-hour time frame. That can happen. So pay attention to that as well. And if we go to the 1-hour time frame, okay, we can see that the market obviously on a 1-hour time frame have given us a pattern, a reversal pattern already. Okay, the market is already pushing up, creating a higher high, higher low at the bottom here. You see that a trend up. So the market is already going in that direction, telling us that this is it, something like this coming. So possible trend or trade that may happen is a pull back to this trend line, which is obviously not there yet, which you should put on your chart on 1-hour time frame. Possible trend line here. Okay, you say, wow, is that trend line? Yes, it is. So the market might eventually do this and then bounce off. So this will be a major confluence for you. This will be a major confluence for you to trade. And then what? Target this high for your profit taking, and then target the next one before it gets to this zone. So again, those are the ways you're going to look at the market this week, because though it's a downtrend, I said this again on my last week analysis. I told you we are at the edge of the market. So anything at this moment cannot be so straightforward to say, oh, we are going to still keep selling. No, the market is still looking bearish, but it's over bearish. Everything is dropping right now. So I will not say to you, oh, let's say we're going to be selling to next week. No, the market may reverse because there are already signals. That's what I'm showing you. The chart is already speaking to us, telling us, listen, I'm changing direction soon. And you have to follow what the chart is saying, not what any indicator is saying. Because at the moment, if you put a moving average here, it's still telling you it's a sell, isn't it? So price action will speak better to you. You wait for the price action to play out. So at the moment, what we have is a reversal pattern forming. Now, there are many things involved, many things you could look at even on a lower time frame, like one hour time frame. Like this is a good trend line here, right? So you can see that there's a good trend line coming down from that zone to this zone, this 1 hour time frame. So what do? You wait for the market to break or retest any of this. Number one, either the market pull back into this zone, giving you a confluence, and then wait for it to break in the intersection. Once it break above which this intersection is, then you have a trade. Okay, and then that means the upside is prevailing. You can see that the market will eventually come here. This is where you have to look at price action, which at where we're looking at 1500. So market may come to 1500, and then that's a major level, and then take profit and wait for price action there. Rejection, a sell, because that's a major confluence zone, isn't it? A sell or whatever it is at that moment, that's what you should be looking at. But for now, possible trade that may happen for the first few days may be a rally up and then a drop, because we already see a rejection going on. So at this end of the trend, we might see play around for a while. The market may play around, push up, assuming it's going to buy, then drop again. Everyone is saying it's selling. It's selling, it's a sell market. Then everyone sold. Then the next thing comes back here, push up again, and then drop. And then before you know it, a proper reversal will take place. It's not going to happen overnight. But within October or towards the end of the September and October, we're going to see a rally up, massive rally up coming. So pay attention to that. History have told us that particular times in the calendar, British pounds is always moving that direction. Okay, so pay attention to that, and that's what I'm waiting for. Really, I'm waiting for what price would do at these levels, and also looking at, this is how my chart is, this is what I'm looking at. So yeah, we're expecting a reversal this week, possibly a short one, another push up here to this zone, and then probably price came back down and then give us opportunity for a retest. Who knows? So if price, let's assume price came back here and push up, all right, we should be expecting another push back into the trend line and then another bounce off again. If that happened, that's it. That's it. That's it. That means it's getting ready to push up. So remember, there must be a push, a correction, and another push, and another correction before another push when it comes to trend trading. So always pay attention to those activities of the market. And one more thing before we run it up for the weekly analysis is that when you are looking at the market, especially Mondays, you want to wait for the market to reset, to get ready for proper trade setup. So like this now, you might see a push up on Monday like this, just kept pushing up. Don't get in. Don't go and buy. because this was supposed to be your entry. So if you see a trade push up like this and still going up, don't get in. That's not how to trade. Wait for a pullback into the zone to give you a proper trade setup, which is your confluences are met before you get in. Very important. Very important, because if you get in there, trade might just be going up like this and then come here and bounces off and then just come all the way down. What would you do? All right. And again, your stop loss is be too large. If you get in there somewhere around there and your stop loss is here, that's too much of a peep, and that's risky. So you need to always pay attention. All right, that's already 41 peep. So let's assume you get in on that. That's about 60 peep stop loss. As a day trader, 60 peep stop loss is too much for you to be risking. So the best thing is let it come to this zone and then give you opportunity to have about 20 pips somewhere here, 20 to 25 pips. That's it. So immediately price come to that zone, you'll be able to take trade from that zone, and then that would be your entry somewhere around here. Okay, and you can make your stop loss just right there and target the next possible high, which is even here 40 pips, or here 70 something pips, or even here, depending if the market goes in that direction, from major level to another major level. So I hope you guys got it. We are anticipating two things: that price will reverse back up. All right, price will reverse back up to give us another powerful buy indication, probably 100 pips to the upside, which is possible, and then begin to give a sign of selling again, because it's going to rally like that before it starts moving up. So this is what we should be looking at. We are at the bottom of the market, so we cannot tell whether the trend is going to continue downward or upward. But meanwhile, what we can see that the market at the moment is forming a reversal pattern. You say, how did you know? I just told you. Let me point you out again to something. Look at this. Immediately there was a rally down. What happened? The market gave us a pattern and then rally up again for about 100 pip. And then what happened? Drop massively again. So again, the same pattern, rallying up again for another 100 pip. Possible a drop. So you get the gist. So again, look at the patterns. Always pay attention to what the market is doing to anticipate what it's going to do next. All right. So I'm not going to say to you, like I said before, is it going to be a sale market? We're going to be selling. If you check all over the internet, most predictions is a sell. But the market in candles is telling us something else. In candles, we should look at the candles. What's the candle saying? What's price action talking about? All right. Looking at price action will help you understand the direction of the market. So what I've done now, you can see clearly that I'm not going to sell until, I like that word, until. I'm not going to sell until I see price below the zone. Then I'll be looking at the next major zone, breaking this low and then something like that. I'm not going to sell. Again, I'm not going to buy until I see price come back into this box again. Then I'll buy. That means there should be a break, a retest for me to get into the trade, to take it to the zone. That's the way you should trade. And then wait for price action at this box, because there's a lot of confluences there. We have the major key zones, we have the trend line there, and also we know that price reacted previously to that zone. So we should be expecting price action there as well, probably another drop before price will eventually go up. If price fails to break this low, pay attention to this. If price failed to break this low, there is no selling below this zone. You see, if price come down and then fail to break this low and start pushing up, that's an opportunity to buy trade. Okay. And then if price push up the way up and come back down, let's say you sold here and come back down and fail to break this low, get ready for a push-up that will break this high. Understanding the market structure is very important. So get ready for price to push up. What am I telling you? Let's assume before you wake up tomorrow or Monday or Tuesday morning, because public holiday, British pounds, yes, I mean in Britain tomorrow. So because of the memorial. Now we see that price push up all the way to that like 100 pip level or something. You were able to catch it, or 80 pips level. And we see price action here rejecting, and then eventually drop and start selling. And you caught this sell. Get out of here. That's where you get out. You get out of this place, because don't anticipate that price will come down low. Price will reject definitely here. Guess what? It's going to form another buy structure that will break this one, because it came here before to test it and then bounces off, and then it's going to break it the second time for a push up to break this high, and then we'll not have a proper reversal taking place. You see? So it's not going to happen overnight, but we have the next 12 days before the end of the month to decide this whole movement, to anticipate this whole movement. So that's about it on the forecast that I'm having for the week 37 of British pounds. If you have any question, I want you to do so now and ask your question. You can raise your hand and then ask your questions. This video will be made available on YouTube, so you can watch it for those of you who couldn't understand how we started. And if you're coming in late, you'll be able to see this video on YouTube later and watch it. So any question, guys? You guys good? Is it clear? I believe it's so clear. I don't think anyone should have a question here. It's so clear that you should know. Any question? I'll take it. If you have any question, I'm here to answer you. Do you? All right. If there are no questions, thank you so much, guys. That's it. That's it. The video will be made available on YouTube, and hopefully everyone will participate. And then if you're watching us on YouTube, watching us on anywhere, subscribe to the channel and follow us on our Telegram group. That's where we actually making a lot of wave in the Telegram group, and show you're there so you can participate. Participate on what we're doing. And also, those of you who are still willing to learn how to trade and how to master trade analysis and also read the charts like this, listen, we have a training coming up soon in the month of October. Get ready. We might be doing that in the first few days of the month of October. So get ready for that training. It's going to be a 2 weeks training long, 2 weeks, and it will change your trading career for life. Trust me. So get ready for that. If you are interested in the training, hit us up in the Telegram group, and you will be much accepted into the forum to get started. Thank you, everyone, and have a beautiful evening. I'll see you tomorrow in the market. Bye.